Q&A in a moment. We're first going to spend time with Anup Jain of Orios Venture Partners. So folks, those of you who are coming into the room, I will open up the line for participation, but in the meantime, your public chat is open. You can absolutely use the public chat to ask questions, participate before the line is open. So, welcome Anup to the show. Let's get acquainted. Let's get you acquainted with the audience. Tell us a bit about your background as well as more about Orios.
Thank you, Shramana. Great to be on your 1 million by 1 million roundtable. Pleasure to be here. So my background, look, I'm an accidental VC, if I may call it. I didn't grow up here in this ecosystem, but I'm very passionate about entrepreneurship. And when I started my corporate career with Procter & Gamble after finishing in engineering and MBA, it was a dream job and all of that. But I've always been, excited by doing, excited about doing innovations and disruptions, something which challenges the status quo and brings about meaning to all stakeholders. So as luck would have it, I happen to have gotten all those assignments in my long corporate career, which required exactly those skills and had a bit of technology in there. So that kept me very satisfied. And sure enough, when India was booming and was racing down this technology highway and startups decided to boom, and I felt that it was the right time to step in, but in a role of a mentor and an investor. And that's what got me into this ecosystem back in again, starting 2015-16. And I've been here ever since. And what better place than to be in the early stage space, and that's how I am at Orios.
And how did you get connected with Orios?
So I began angel investing soon after that, as as India was booming with early stage startup ecosystem around that time, which is 2015-16. And that's when I met up with Rehan, who was the founder of Orios, and he was looking for a partner, and that's how we met up, and that's how I came on board.
Now, I know Rehan for a long time, and I would say Rehan's instinct is more on the consumer side, and you come from Procter & Gamble, so is your instinct also more on the consumer side?
Well, let's put it this way. Look, I've traveled the length and breadth of the country, always kept an eye out for business opportunities. I'm a Jain after all. And work's taken me to different domains. I've worked in different industries, consumer, retail, dealt with trade, lived overseas as well, worked overseas as well. So that brought in a lot of knowledge of how things could shape up in India as India emerges from being a developing nation to a developed nation in the coming years, and technology would have played an inevitable part of that. So I keep my consumer instincts right there intact and bring on everything else through gathering a lot of knowledge, reading, and just listening and seeing where the opportunities are.
So let's talk about both of those topics. One is how do you Rehan has been here. Rehan and I have talked over the years many times actually. What is your current analysis of where we are in the Indian ecosystem, and what trends are you seeing? What trends are you predicting, projecting, and how are you evolving Orios? Again, Orios has been around for a long time. It was one of the early players in the Indian early stage ecosystem. So how are you evolving it to align with those trends?
So the Indian ecosystem today, as it stands, is number 3, in the world in terms of the number of startups, unicorns, and it's contributing in a big way, not just here but also globally. India is known as a tech superpower, and it's coming to play over here domestically as also for the world, which is the best trend that we could have had, because so far the first wave of IT companies that came in from India were actually were serving the world, and which is the likes of TCS and Infosys, and they continue to do a good job and make India proud. But now what we're doing is seeing a lot of cloud-based internet companies which are solving India's problems in different sectors. And as the government has announced, India wants to be a 5 trillion economy in the coming years. So how do we gallop the economy is the question. And the obvious answer to this, just like manufacturing was for China back in 1995, and it started racing thereafter, a similar answer lies in the use of technology here in India and harnessing it for every possible sector that matters to the country's GDP. So Orias, as a fund, has identified six sectors which are going to drive the economy, whether it's agriculture, financial services, marketplaces which drive productivity and efficiencies, new content and gaming, and also health, which is a very important part of making any emerging market a developed one. And all of this is not possible unless we get skilled manpower. So education is at the heart of this, and we believe in upskilling India. And how young this country is tells you how many students and how many hopefuls are here to actually participate in this economy of the future. So that's the last sector that we feel is pivotal, along with the others, to shaping India into one of the largest tech ecosystems, as also driving its own ambition of being a 5 trillion economy in the coming years.
And what is the fund size of Orion these days?
So I would comment on the check size, and what we've on, and you asked about how we have been shaping up in response to all the trends. As you know, the check sizes at the seed stage have gone up, and in response to that, Orias invests anywhere between $1.5 million to $2.5 million in a seed stage startup with some traction. So we look for some degree of data and traction before we make that investment. Um, Pre-seed is an area which is very vibrant with deal flow at this point of time, and 2021 was, I guess, one of the high points for India as well on this end, and therefore we feel that we should participate, given the rate of digital adoption in the economy with a larger check, because companies are being given the opportunity, given the affinity of consumers to actually scale much faster. So they shouldn't have to come back to investors over shorter periods of time to seek extension of runways or to conduct experiments or indeed to scale, to the next level. So we've responded
So,
to this.
I have a question on what you just said about pre-seeds. You are doing seed in the 1.5 to 2 million range, which means somebody else is doing the pre-seed to get to that level of validation so that you can come in with a larger check. What is your analysis of the pre-seed ecosystem right now? How much pre-seed work is going on, and then how much of what you're seeing is actually in your pipeline is bootstrapped entrepreneurs going straight into seed?
So the pre-seed ecosystem today is absolutely vibrant. I would say there is so much activity over there. There is a lot of specialization which has also come in as well. So one has seen the rise of specific, networks and platforms who are focusing on, say, gaming or crypto or just plain agriculture or just education. So a lot of specialization has come into the space, and it has been set up by people who have been associated with those spaces in some way or the other, and they have brought on founders from different domains in a big way, forming a specialist vehicle. What that has meant is that the quality of deal flow from some of these sources is excellent, And we feel really good about that as somebody coming in as an institutional check because we can rely on some of these specialists to have done some of that filtration as well as early mentoring to take the load off our back, so to speak. And we can then focus on taking them to the next level.
And what is your estimate of how many startups are in the ecosystem right now?
Oh, that'll be hard to imagine. I would imagine that there would be thousands. And this is just those who we are able to see through various sources, but there could be many, many of these. And I would say that, look, tier two cities, tier three cities are yet to see that explosion. So largely the startup ecosystem in India has been concentrated between two cities. One is Delhi NCR, where I'm based, as you can make out from the background, specifically Gurgaon and a bit of Noida, and also Bangalore. So these
Mm-hmm.
have been the two principal cities of hyperactivity, and almost 80% of all tech startups are kind of based over here, which means that a lot of talent migration has taken place to these cities. Founders have moved to one or both of these cities to set up offices and to set up work over here. And we yet to see some of that trickle down to, let's say, a Hyderabad or some other location like a Chennai, etc. So yeah, but there are thousands at this point of time. I would imagine at a pre-seed level, and what we see is only a few hundreds.
Mm. I actually think that the number of people who are working on startups, they may not be quite making it to the VC deal flows yet, but it's more in the tens of thousands.
Exactly,
The level
that's
of
true.
interest, the aspiration of becoming an entrepreneur in India right now is really exorbitant.
That is true. And I would say that it's beginning earlier rather than later. So it's not a phenomenon that you see when someone gives up a corporate career after 6 or 10 years of work and decides to jump in because they've got a nice little financial cushion out there and which lets them take the risk. People are taking it up straight away while even finishing their degrees and forming their teams and they're working on their ideas even before they leave college. So I think this
And
is, yeah.
a lot of bootstrapping with a paycheck going on right now. There's enormous amount of side gigs. People are starting companies while holding on to their jobs.
Yeah, well, that could be happening as well.
So let's talk a bit about your portfolio. What are some of the highlights of that you're really proud of and that are illustrative of how you operate, what you like, what stage did they come to you? Why did you pick them over others, given how many choices you have?
Yeah, so I'll probably start with the latter, which is the principles, and I think all our companies, and I'll name a few of them because it's not possible to go through all of them, uh, have to cross those barriers, and we're incredibly proud of having invested in each one of them, irrespective of where they might be at the moment. It's only a matter of time before each one achieves its own full potential. I think we look at the early stage for quality of founders and their level of cohesion. And therefore, when they pitch to us, we look for a well-crafted, a well-communicated storyline.
Mm-hmm.
And that is extremely important because in there is the rational and the emotional stuff, both of it.
Mm-hmm.
Because it's not just that a founder gets up one day and decides to start a company because there is money in it. The passion has to come from somewhere, right? And the passion is often a personal experience or having worked somewhere, seen a gap or an opportunity. And along with it is something deeply personal, which is usually about making an impact or achieving one's full potential in a particular space or some event in one's life. It's important for us as investors, and especially for Arias, to know where they're coming from and how deeply committed, therefore, they are to building
Mm-hmm.
that. dream, despite all the pitfalls of entrepreneurship, all the disappointments, all the late nights, and all the missing of family time and personal time, and fears and insecurities that come along with setting up one's business. Uh, so that's something that we look forward to. We generally go for a founding team which has more than one founder, although
Mm-hmm.
it's not a hard and fast rule, I would say. Sometimes a single founder can blow your socks off and be and it's not that they are not complete, but it's always good to have the yin and the yang. It's in a tech company, it's good to have the front end, the business end, and good to have someone looking at the back end, at the delivery, and looking at processes and operations while the front end is taken care of. It's a good combination, we feel, that holds the company in good stead. It also brings realism in terms of strategy and execution, what's possible or what's not possible. And we look for those cues where the two of them are moving in tandem and happy and complement each other. So that's one part of it. Of course, I think I'll be repeating what many other investors would say, which is we look for a large market, we look for valid problem statements. Since we are focused in India, we have a deep knowledge of the country, and all the partners have traveled the length and breadth of this country personally, taken every possible means of transport, lived in not just Delhi, Mumbai, and Bangalore, but traveled beyond. So we understand those problems intuitively, and we should be able to see a genuine problem being solved for a large number of stakeholders, which can then lead to a viable and a sustainable business. Um, and that's very important as well, because funding is only in the initial period of establishing a company, its proposition, and scaling it to a certain level. Beyond that, the business model itself has to sustain the company. Investors can't keep coming in after you've scaled to a certain level. And that's very important for us to be able to get conviction on. And that, I think, the root cause of that is sometimes sizing of the market and the problem statement, which really defines how much pain is being felt with current methods and solutions, and therefore how much of market share can be taken out by the unique solution that the company is placing in front of the same stakeholders. So that's the second bit. Third, of course, as I mentioned, we would like to see some early signs of some experiments, some learnings, some successes and failures, and how founders are dealing with it. I think the last part is extremely important because problem solving, or hacking as it is called in the tech world, is extremely important. So when you get stopped in your tracks, what do? You have to find a different route, and you have to find the shortest and the most optimized way to reach to the same destination. And you don't have unlimited resources. Time's on a clock, and that means money's on the clock as well. And you've got to reach there so that you can convince yourself that you're building something really sizable and meaningful, which is going to grow into something eventually sustainable. So I think these are the three things. Just to name a few companies, of course, the more popular ones and household brands today are PharmEasy, Country Delight, Go Mechanic. We have now Battery Smart in the area of electric mobility infra. We have Genco's in the area of financing healthcare, Carbon, which is in the area of corporate cards and SME banking, as well as a few others like NextWave, which is there in the area of educating India's engineers and getting them ready to be tech professionals to serve anywhere in the world. So these are some of the companies, and this is just a handful, by no means a comprehensive list, but each one of the companies and founders um, that we uh, that we select tend to pass by all these filters, no doubt about that.
Anup, let's double click down on a couple of issues across your portfolio, and you can use whatever example you want to use in answering my questions. What are you seeing by way of successful business models? What appeals to you the most when you see a company and you're obviously pattern matching against the business models that are working? What do you like the most?
What we like the most is uh, capital efficiency. When we see a go-to-market strategy in operation, and when we see that the way the market has been approached with a solution that is creating the necessary virality and bringing down future customer acquisition costs, it is the healthiest sign of a business on all counts. It means that the initial set of consumers are incredibly satisfied. It means that they are passing on referrals to others free of cost to you, and that is bringing down the cost of consumer acquisition, which essentially points to scalability and consumers of a similar kind existing in great numbers coming into you organically, which points to, again, is a sign of scalability very clearly, and which all points to capital efficiency, which means that you can reach that destination much faster than others. So it is this magic formula which founders and talented founders are able to crack through a mix of their product, their go-to-market strategies that they're able to bring to the table. So I think these two are extremely critical.
What you're looking for is more unique and not unique, more effective go-to-market strategies and against whatever business model is working in that go-to-market strategy.
Yes, the reason is very clear. Look, two sets of talented founders can probably crack uh, uh, probably a product which is not too dissimilar to each other, right? But eventually, it's going to be the go-to-market strategy of roping in those consumers, finding that mix between new customer acquisition and improving the product and the pace of it, which is going to differentiate one versus the other, and therefore one is going to race ahead of the other much faster and become a number one. So it's the difference between a number one and a number two and a number two and a number three. And that essentially bodes very well for scalability because we are investing behind high growth models where the problem is large, and therefore when you launch a product the right way, you can keep fine tuning the product, and but if you don't have the right go-to-market strategy, if you haven't executed that well, and if the
How
costs are
much,
too high, then it becomes very difficult.
yeah. How much discipline are you seeing, especially in the companies that are becoming successful in the early stages and getting flushed with capital? How much discipline are you seeing on unit economics of go-to-market strategies?
A very good question, Shramana. So this is different for different sets of founders. I must say that at Orios we've been lucky to find set of founders who are extremely conscious and responsible with the funds that they have, and therefore indulgences is not something that I've heard them discussing either with us or privately so. So they guard their money, they guard their ideas, they test and experiment. That's the lifeblood of any startup, but they do it in a pragmatic and judicious manner. And so far, we haven't seen at least that in our folio. And I'm very, I mean, I feel very lucky about that. Generally
Mm-hmm.
across the board, I think what you're alluding to is the situation may not be so, and in which case it is inevitable that those companies will run out of cash pretty fast because they've made large commitments that they can't walk out of, and that's extremely dangerous. As also we have seen, the recent macros have been not too favorable. around the world with the geopolitical situation and inflation, etc. So some of the sounds have been quite negative on the funding front, particularly at late stage, and therefore it's very important that irrespective of a macro situation, I feel that our general advice to founders is um, put your money to good use. Don't wait for the right opportunity to do that. You should be doing that every day.
What is your estimate of the unicorns, the heavily funded unicorns in the Indian ecosystem? How many of those are going to become sustainable, successful companies?
Well, my wish is that each one of them do become sustainable, so India becomes
Which,
a beacon.
not which, I'm asking for estimate.
I haven't performed an analysis, but I mean, I do hope and wish. But I think a large number, I would say 80% and up, should be definitely walking a straight line, walking a tight line, and will be able to and should be able to do that. Um, I don't have any particular names in mind when I talk about the balance 20%, but a general, statistically, a general one, seeing some of the global phenomenon as well, could have, less than impressive results, although they could be sustainable as well. But whether they will create those iconic stories, I think, yeah, they could be something that separates the men from the boys, as they say, even in that club.
Let's talk about go-to-market strategy. What are you seeing as some of the, most effective go-to-market strategies out there? We're hearing a lot about these short videos, like the, TikTok, Reels kind of stuff being one of the ways people are finding a lot of traction. So what are you seeing as the most effective channels of customer acquisition?
Well, it's different for different sectors, and therefore what applies in, agri may not apply in D2C. What applies in financial services may not apply in let's say health. So different strategies, will be there for customer acquisition. However, it is indeed correct that short videos or the creator economy has taken off in India as well. Thousands of freelancers today are producing meaningful content right from their homes.
Mm-hmm.
Whether it's entertainment, for example, we have invested recently in a company called Bolo Live, which is about live streaming of content by creators from small town India. And it is a perfect example of how the creator economy producing content for entertainment in this case is doing the job of entertainment, right? And is competing therefore for your time in front of the telly or in front of Netflix or in front of anything else that you might be watching. Similarly, there has been a tremendous dependency, if I may call it, of direct to consumer brands, which have indeed become big in the last 2 years, on influencers who are producing this content. And of course, the pandemic gave a lot of opportunity to everybody, including all of us, to produce as much content as we like because we were all cooped up in our homes. People have really taken to the Instas and other platforms, YouTube, etc., to produce content of all kinds. They've been identified by some of these brands as being aligned, perhaps to their brand charter and equity. And therefore, now there are even companies and startups which are linking these creators to these brands in a systematic, programmatic fashion to be able to drive the agenda of consumer acquisition for these brands, of course, at a cost which would be considered attractive. Um, uh, Whether it is meaningful to have such a customer acquisition strategy, I think yes. The good old days of the 30-second television ad, signed up with a paid celebrity, um, costs too much, along with the sales and distribution costs, and that's the old CPG, FMCG model of legacy brands, if I can call them that, on your show. But today's brands are relying on a direct contact with consumers through social media platforms, and they can't do that job alone from their own handles. So they need real people using their products and espousing their products.
Amplify.
Yeah, using not a selling tone, but a telling tone. And when you get interested in the tale or the story, you tend to buy the product that you find mentioned in that story as well. So that's the hope, and that I think is far more brand building and far more convincing for a consumer of today versus yesterday.
And what is your experience or your portfolio's experience with Google search these days? That's also going up in price. And what are you seeing in your portfolio?
Well, for some of our companies who are doing consumer acquisition, it tends to be part of the bouquet they use. I wouldn't say that it's the only thing that they use. It remains useful because, after all, it is based on intent-based search. So
Yeah.
it therefore speaks very well to acquisition. Only a person with a high intent would type in a keyword which is close enough, to doing business with your company, and therefore it makes sense to place the ad in front of them and get them over the line. So it is part of the bouquet, but its relative importance in the scheme of things, uh, I think, has come down for companies which are also looking at alternative methods like the creator economy for building their brands in a more powerful way. Uh, because it's difficult to build a brand, especially just placing some text that comes up when you hit a search button on a keyword. So it is highly uh, conversion oriented and not brand building oriented. So I think one has to use a mix of the two strategies. So larger brands tend to spend obviously bigger budgets on conversion because the brand is already built and it's time to encash that at the optimized cost. But brands which are looking at building themselves, they're looking at socials, influencers, creators, all sorts of other methods to tell their story in a more powerful manner.
One of the biggest beneficiaries of India's venture capital boom is the creator economy.
Well, one is that, and second, I would say, is India's youth. They have an alternative. They wanted to work in co-working environments or out of cafes or in hybrid work cultures. The tech economy is providing that much more readily than old and legacy companies, which are finding it very difficult to implement it, given their given their cultures. So I think it's been great for talent, young talent, graduating at this point of time, to find work in companies which are making an impact, which have vibrant work environments, and are fast-paced and bring a lot of challenges because one is young, one is wanting to do all of that
Well,
versus
and
being.
the adoption of online learning has really accelerated since the pandemic. So the combination of this, lots of opportunities for youth and lots of mechanisms of training that youth has been very powerful.
Well, that is true. I think upskilling, and which is why Riot made an investment in Next Wave recently, and we're very excited by the opportunity of upskilling thus. I think I'm forgetting the source of the report, but one of the reports I read said that every employed Indian today requires about 100 days of upskilling to be in step with the industry's needs, and that includes me as well. So there is ample opportunity uh, for us to learn, and I think online is a very powerful way to refresh yourself and to stay in step. And there's enough content going around in the online medium. Yes, so I agree with you.
And you mentioned earlier that the Indian startup boom has happened in two cities, Bangalore and Delhi, the NCR area. We've had a lot of success in Chennai as well. We are probably the some of the bigger stories in SaaS came out of Chennai, actually,
True,
the
true.
Zohos and the Freshworks. But let me ask you the question about what are you seeing in the other places? And some of the reason why I ask this question is we are seeing companies coming out of Chandigarh and coming out of many places that are not Bangalore and Delhi NCR. And that's part of the vision of 1 million by 1 million is to enable,
Hmm.
not only all of India, all corners of India, but all corners of the world. So we have companies from Tanzania, we have companies from, Chandigarh, and we're very proud of that. So, and of course, I'm from Calcutta, so I've always had a soft corner for Calcutta, which it takes an infinitely long time to get its act together. But, but it is a different India, it is a different world, it is a different working environment. So how is that impacting the startup ecosystem?
So I think there are two things. I think there's aspiration everywhere. There is no doubt about that, right? So
Yeah.
it's not that only um, only people living in Delhi and Bangalore are feeling like founding a startup, but it's happening everywhere. So I think that aspiration is universal amongst India's youth and not so young as well. Experience anybody who wants to start a startup, but at the same time, I think the resources are at this point of time clustered in these two cities in a big way. And finding the right team members, finding those tech alphas, all of that, therefore becomes much easier, and which is the reason why founders then migrate to either of these cities. Also, I think from an investor's point of view, you will find most investors having their presence in Delhi, Mumbai, and Bangalore, and therefore it becomes easy to have those conversations, to be able to meet up with them in a post-COVID world. There are lots of events and mixers, things that are happening over here, which help a founder, exchange notes, clarify anything, form networks, which is incredibly, important as well in the entire in the entire journey. I do hope and wish that, every city, every principal city, I mean, down to Ahmedabad, Surat, whatever you name it, Chandigarh, Calcutta, et cetera, should all have their own ecosystems. And I hope we grow to that level. But at this point in time, this is where things are. But there's aspiration everywhere. So,
Are you
uh,
seeing, so in Silicon Valley, we see a trend where there are founders in Silicon Valley, but they have operations elsewhere. And there are a lot of US geographies that are coming up very well against this trend. Basically, Vermont has created this special program to have remote workers live there, some tax incentives, et cetera, et cetera. This phenomenon, Utah has become a major hub.
yes.
Um, so are you seeing that? So are people setting up companies in Bangalore and Delhi, but having a satellite somewhere else?
So I think that we are behind the U.S., but I'm sure when it grows grows beyond a certain size, and I think it is reaching that point when we will see some of these incentives being rolled out. The good thing is that the state governments, just like you took some names out there in the U.S. like Utah and Vermont, etc. The same way, a lot of states today have realized the potential of this ecosystem on their own economies and the reason to roll out the red carpet. The day is not far when we will hear of such incentives being played out. I mean, tax holidays and things like that could change the whole complexion of it.
But there's also market dynamics, right? There is tremendous attrition in the Bangalore NCR economies. There's tremendous attrition. The talent war is furious. So people do look for alternate ways of accessing pools of talent.
Oh, absolutely. I think it's with the hybrid work culture that has been implemented by most tech companies, where workers can or employees can decide where to base themselves, and on certain days come in for meetings or you know uh,
Yeah.
face-to-face kind of catch-ups. Even in Arias, we have implemented this hybrid culture, so we can work from anywhere, and all our colleagues can do that. And we come together, to meet up with each other when there is a need for a face-to-face, or we also conduct offsites, etc., so to help people get to know each other better. So it just augurs very well for productivity, because obviously in the most populated of cities, there is deep congestion, and we don't want to lose productivity on the commute. We'd rather have employees energized, charged up, and contributing fully over a call like this.
Yeah, yeah. No, I think all these dynamics that have happened in COVID, there have been lots of bad things that have happened in COVID, but there are a few very, very significant productivity gains that have happened in COVID. One of them is being able to work without commute from anywhere. And I think that also bodes very well for the more distributed development of India and the world in general. I see today, American investors have no trouble investing in people over Zoom calls, which was not the case. Before COVID, that was absolutely not the case. So I think that people are much more on a level footing. And you can sell to global customers, but even B2B customers, you can sell without actually meeting in person, even larger deals. So these are very entrepreneur-friendly trends.
Oh, absolutely. I think you hit the nail. We've done investments in startups and met the founders post the pandemic, 1.5 years later or 1 year later. And we're not outliers. I mean, of course, every other investors, change their point of view, and which is augurs very well for the ecosystem. And for founders as well, they can focus on building their companies. They don't have to take those expensive flights, take that time off,
Right.
to be in a different city, to just do
Big
two
line.
meetings.
Yeah,
Yeah,
absolutely.
yeah, that's
All
that's
right,
very well.
Anup,
Yeah.
it was a real pleasure speaking with you, and we'll keep in touch. Um, it was very interesting catching up on what's happening at Orios and in India in general. I've been working on the Indian ecosystem since 2005. So, well, actually, I started a company with an Indian product backend in 1994, which was way before all this became mainstream. So it's been a fascinating view of what has been going on from a development economic standpoint. And it's really, really interesting to see.
Thank you, Shravana.
Okay,
Likewise, and look forward to being in touch. And yeah, great to be on a roundtable, sharing my views and talking to you. It's been a wonderful morning U.S. time and evening out here in India.
take care. Bye-bye.